Hello traders, my name is Gregor Horvat and welcome to a new video update. We will take a look today on euro dollar, cable and dollar index. On euro dollar weekly chart, as you know, we are tracking this possible start of a new larger leg lower on the euro dollar because of possibly completed wave B running triangle from 2008, and the most importantly because of this broken trend line connected from 2012 lows, which suggests that this market is headed lower, especially because the rise within this corrective channel was clearly in three waves. In fact, this wave C was very similar to this wave A measured in pips. Okay, so I'm bearish here also because we have 5 waves down from this year highs on this daily line chart. So I'm looking for lower levels here, and it seems that the wave 5 will be much more extended than firstly thought. This was wave 1, wave 2, and it seems that we are now in the middle of a black wave 3, so I'm looking deeper here. Here is also our 4-hour count where we mark this wave 1 as a leading diagonal. This was wave 1, wave 2, wave 3, wave 4 and wave 5, so overlaps between wave 1 and wave 4 is allowed. Then we have we had a 3-wave bounce which covered this gap here, and this gap, as many times before, reacted as a very good reversal zone, and the euro dollar fell sharply since then. So obviously I'm looking for deeper levels here, possibly towards 1 to 6 in coming days. Okay, meanwhile we of course should not see any reversal higher back above 1 to 890 level, because if we are in the middle of this blue wave 3, then we know that coming bounce in wave 4 must not trade into territory of a wave 1, but maybe if you are considering 1-2-1-2 burst scenario, then you know that wave 2 must not retrace more than 100% of wave 1. So in such case, this 1 to 890 should be our common critical level. Okay, so of course we are bearish on the euro dollar, but if this level will be breached, then of course we will have to adjust the wave count. So I have prepared this wave count for you, which is actually expanding diagonal placed in wave 5. Notice that euro is now also testing this support line connected from waves 1 and wave 3, and the interesting thing is that we already have here 3 wave moves within wave 5. Okay, we know that these expanding diagonals are actually the same as ending diagonals. Okay, but the only difference is that you will see these lines expanding if you will connect wave 2 high and wave 4 high and wave 1 low and wave 3 low. In normal ending diagonal you will tend to see this line to converge. Okay, so actually the structures are very similar, 3 legs in each subwave, and as I said, if we will see a push back above this critical level, then of course in such case we would be back above this wave B, which could suggest that maybe we have a low in place on the euro dollar. Okay, so this count is definitely very important. We need to keep an eye on it, and any reversal, impulsive reversal back higher sharply towards 130 psychological level would suggest that we are already trading higher in larger degree of a wave 2 pullback, this blue wave 2. But for now, because we want to stay with the trend, we want to stay with the current sentiment, we of course need to stick with this wave count. Okay, and now let's take a look also on cable. On cable weekly chart, we are here already looking for a completed triangle in huge wave B. Okay, so obviously we are looking lower here for a huge 5-wave decline in wave C. The reason why we are bearish is simply because of this 5-wave fall from 2007 highs, which was wave A. So even if the whole fall will be just corrective, we still need 3 waves, because we know that corrections are structured minimum by 3 legs. In fact, this ranged price action since 2009 lows is very typical personality of a corrective movement. Okay, so this is impulsive move, very nice example of an impulsive structure. So if that's an impulse, then this should be corrective movement. Okay, so I think you get the point why I am looking lower here. Also, we have seen a breakout through this 2009 support line, so I'm looking for a completed wave B here, also because prices extended below wave D, and also because this fall is very sharp. As I'm comparing this fall to previous declines, I can actually see that this fall is actually the sharpest and the longest. Okay, so looking lower here makes sense. On a daily chart, we are tracking this impulsive decline in a larger degree of a black wave 1, and this wave 1 is obviously still incomplete. We have here wave 1, wave 2, extended wave 3, and wave 4 pullback. Now notice where this recent reversal occurred. We tested this trend line, and at the same time prices reversed lower from June 2012 low. Okay, this June 2012 low was broken in February, and we know that when the support is broken, then this support will usually, not always, but usually turn into a resistance when corrective bounce will occur. So this is a very nice example now of a bearish reversal. Now this June 2012 low was actually low of this wave D, where actually we have seen triple bottom here. Okay, this was first, second, and third. So this was a strong support which was broken recently. So this support now became resistance in this wave 4. Now this wave 4 is I'm still not sure if this wave 4 is already finished here, simply because this wave C was quite small compared to wave A, but I need to respect this broken trend line. But still, this is not impulsive to the downside yet. Okay, but this current structure could unfold into something bigger. So if we will see downtrend extensions back above this wave B swing low, then I think this market is headed lower. Until then, maybe this market could also stay in a range and still test this 38.2% retracement, which is a very typical Fibonacci level of this wave 4 compared to distance of wave 3. Okay, so that's for the cable, and now let's see dollar index. On dollar index weekly chart, I have actually 2 wave counts. The first one suggests that we are in a wave B triangle, now trading at the end of this wave D, so we still need wave E pullback, and I would like to see this pullback from current levels. Okay, actually maybe a little bit higher, but definitely we should not see any push above this wave B high. Okay, the next wave count suggests that this wave D and wave E were a little bit smaller, but still a valid wave count, and that this trend line, which appears to be on a test now, and if breakout will occur, then of course this could be start of a larger 5-wave rally in red wave C. Okay, but for this scenario I definitely must see weekly close above this wave B. Okay, so for now this is my primary wave count, and if wave E will show up, then this wave E could match with wave 2 pullback on the euro dollar. So here's my daily chart. This is a 5-wave rise in wave C, wave 1, wave 2, wave 3, and this was a wave 4 triangle, and we presented you this running triangle in this week. And this is a 5-wave rise in wave C, wave 1, wave 2, wave 3, and this was a wave 4 triangle, and we presented you this running triangle in this week. And this is a 5-wave rise in wave C, wave 1, wave 2, wave 3, and this was a wave 4 triangle in this week. this is actually a triangle where wave B moves above the start of wave A, okay, and that's why it's called a running triangle. But basically it's still a 5-wave pattern, A, B, C, D and E. And notice that this wave E made a 3-wave fall, fill the gap and then reverse sharply higher. We are already at new highs, but I still anticipate further strength here, simply because we need 5 waves in this red wave 5. So I have here 2 projection levels that I'm focusing on. First is 83.50 and then we have 84.30. Now this is a triangle measurement. I took the start point of this triangle, which is here, obviously, where the wave 3 ended, and I extended this this upper trend line and lower trend line, and took this distance and compared it with points from end of this wave 4 and also from this breakout point. Okay, so that's how I get these two levels. So for now I'm focusing for higher levels because we need 5 waves up, but if the market will reverse lower back below this critical level, then maybe this wave 5 is already finished because of the euro dollar, where I presented you this expanding diagonal placed in wave 5. So we need to keep a very close eye on this 82.72 level, and on the euro dollar I think it was 1 to 880 or so. Okay, so okay, that's it for today, and I will catch you tomorrow. Have a good day. Bye.